This is Matt Faircloth, and this is the Cash Flow Digest.
It was a great concern that across the board, there was going to be just a flood, a tsunami of distressed deals hitting the market.
There's no blood in the street, Herve.
No blood
Not
in
a
the
drop.
street.
This is Matt Faircloth, and this is the Cash Flow Digest. We're about halfway through, right, the year, with it being just after June 30th. So today's program is dedicated to talking about where we are in the market, what's going on in the apartment building market, and what better person to bring on to talk about what's going on in the market than our market hunter, bow and arrow, our guy, my man, my partner, Herve Francois. Herve, come on in here, buddy. How are you today?
Man, it's always a great time to be with you, Matt. I'm doing very, very well.
Let's talk about this article that you found that you and I should break down real quick and take it away.
Yeah, no, I appreciate it, Matt. Thanks very much. The interesting thing about this article, it's actually a nice segue into what we're going to be talking about a little bit later in this podcast in regards to, what we've seen this year, what we're expecting for the rest of 2024, and how we're doing some of these deals, right? And if I would like to put in context, the beginning of this year, we're talking about what was the concern? What was the consensus from real estate investors such as ours, right? And this was flowing from pretty much the fourth quarter of 2023. And that was, oh my goodness, there's going to be a lot of distressed deals coming to hit the marketplace. There's going to be a lot of foreclosures. There's going to be fire sales and so on and so forth, because we know so much, floating rate debt was put on deals a couple of years ago. It was time for them to come and refinance. They can't refinance. Interest rate caps are, were not purchased, or they're coming to an expiration, and so on and so forth. And so there was a great concern that across the board, there was going to be just a flood, a tsunami of distressed deals hitting the market. Fast forward to today, July 12th, right? We're 7 months into the year, and where is it all?
Yeah.
What's going on?
There's
right?
no blood in the street, Herve.
No blood
Not
in
a
the
drop.
street.
No.
Now, I say, it's probably it's not a deep red color. Maybe it's a pink colorish, but it's certainly not deep red color, right?
Yeah.
So this article again, highlights potentially why it is this pink colorish and not deep red. And so this article is actually from RealPage, and I got to give credit to RealPage. I mean, it's not just one person's opinion, right? This is a group of analysts, and this is what they do. They study the market, they study the trends, and they do it not only on a national basis but on a local basis as well. And this article, it's also fresh, very new. It just came out just last week. But the title of the article is that U.S. apartment demand surges in the second quarter.
Ooh.
And that title just kind of caught my my light bulbs just started going off. I'm surges, that's a pretty strong verb. Versus again,
one of big words, man.
Yeah, earlier this year, surges is pretty strong.
Yeah.
And I was not surprised in regards to the direction of apartment demand going up, because I think I do a pretty good job keeping my finger on the pulse, what's going on across the industry, particularly on a localized basis, or at least regional basis and everything else like that. But again, I was a little bit surprised about the word surges, right? Because that just really leads to accelerating growth in demand for apartments and whatnot, right?
Yeah.
You look at, and it's understandable a little bit, when you take a look at our entire housing industry, it's not only multifamily units. We also, keep an eye on what's going on in the residential market, right? Because there's flows in and out between residential and multifamily back to residential, and so on and so forth. You and I were talking about, how there's some weakness in the residential market, not a lot of inventory, not a lot for sale, right? Interest rates high, people don't want to get locked into higher interest rates. There has been a lot of construction of single family homes and so on and so forth. But what there has been a lot of construction in multifamily units. Knowing this, how can there be a surge in demand for multifamily units, right? Mm-hmm. And I think those operators or developers, I would say, of multifamily units, they've gotten very, very smart, right? I mean, a lot of them really took it on the chin back in 2008, and they realized that going forward, they don't really want to go ahead and build ahead of not knowing whether or not there is demand for the units that they're going to be building. So they've seen that what had happened over the past few years, that there was a shortage. There was a low amount of inventory for multifamily units. It was at that time they started putting their shovels in the sand and say, let's go ahead and start construction. Now, construction, this is where we get a little bit more localized. It wasn't a strong surge in construction in multifamily units across the country. It was in localized places, specifically those places that saw huge rent growth, let's say in 2022, 2021. We're obviously talking about the Sunbelt regions, the South regions, when we're talking about Dallas, Phoenix, Austin, Tampa, Atlanta, Nashville, and so on and so forth, right? I mean, you're talking about those areas, they were seeing rent growth of 10, 15, 20%. We knew that was an anomaly. We knew that was not the norm, that you did not see that in a historical cycle, and going forward, that would be unsustainable. And it is now unsustainable, right? And so a lot of this construction has taken place, and a lot of this construction has resulted in 250,000 units being absorbed in the first half of this year. That only compares to about 280, 290,000 that was absorbed in the first half of 2021, us coming out of the pandemic, right? So I found that kind of interesting. And the majority of these units, those 250,000 units, they were absorbed in those Sunbelt cities that I just mentioned, because those were the areas where you saw supply was way undersupply relative to demand. It's now caught up, and what has that resulted in? It has resulted in tepid to slightly declining rent growth in those markets because so much supply is coming on. But I would not fret, because I really believe that it's more of a 2024 phenomenon more than anything else, because those same cities are seeing a lot of jobs.
That is yet another Cash Flow Digest episode in the books. Feel free to like this episode on Spotify if you're watching it there. If you're watching a YouTube segment of it, make sure you like it, subscribe to our YouTube channel, and make sure you leave a comment anywhere you're watching it. Leave a comment. We love engaging with our communities, having conversations with people. So make sure you like it, comment it, share it, get the word out. We're doing great stuff here at DeRosa, talking all kinds of real estate shop with people. Have a great weekend, guys that are watching live. Thank you so much for watching this program, and we'll see you on the next one.